All right, guys, welcome back to the channel. We're looking at the multi-year bull market today. There are new all-time highs on silver, reaching $61 an ounce. When I first started loading the position of this physical, extremely heavy metal, this thing was worth about 180 US dollars back at these lows. When it was trading around 18 US an ounce. This is a 10-ounce bar. Of course, we all wish we had more. Fortunately, some of us have more, but you're not going to be storing them at home. The amount of silver you need for a position to make anything worthwhile is quite significant. And so from those times, silver has gone from 18 bucks an ounce now to 61 an ounce. So this puny little 10-ounce bar was 180 bucks. Now it sits somewhere around 61 an ounce. Of course, you've got to take into account fees when you're buying and selling these physical assets, but I thought it was just a bit of fun at the beginning of the video because, well, silver's hit that new all-time high, and the multi-year bull market has been going on for many, many years. We could count it from 2020, we could count it from a little earlier, but I thought in today's video I would discuss a few important topics that we've covered in prior videos, but we'll update them now, especially as in this case, silver continues to hit new all-time high prices, 61 an ounce, and compare it to other major asset classes like Bitcoin and the stock markets. So if you haven't already, hit the like button on the videos if you find value from the content I've been bringing you for years. Of course, subscribe to the channel if you're new. We're covering Bitcoin, stock markets, stocks, of course, cryptos, precious metals, and the real estate cycle. So as I mentioned, there's a few significant questions. Should you buy metals in a recession, or as we found out in the video just a couple of weeks ago, into a recession, or should you wait for that recession? Should you buy silver or gold? Which one? And for the case of the Bitcoin holders or just pure maxis like your Michael Saylors, should it be silver or Bitcoin? And we, of course, we'll talk about metals in general. So you could look at it like Michael Saylor versus Peter Schiff. But of course, we're not as stupid as either of those when it comes to picking only one. We're a little bit more flexible in our views when it comes to investing. So 6 months ago now it says 5, but you can see the date here, 10th of June. Today is in Australia, the 10th of December. So 6 months ago, we looked at this multi-year bull market beginning to break out. And this is what Gann calls a campaign. You can see the market building up. You've got many, in this case for this commodity, many, many years of consolidation. This was from late 2014 to early 2020. So roughly 5.5, 6 years consolidating. Big breakout, started to consolidate again. And you could break this up into two sections, one here with a test and then another accumulation before it began to break out, which is where we find ourselves now. This roughly 12 months on the incline, and then we had the breakout. And of course, from that point, silver's gone absolutely bananas. And I want to look at what happens next for silver, just looking at historical evidence that we have to use, trying to figure out our crystal ball, what we could expect from silver next. So 5 months ago, we identified that there was going to be a breakout point here for silver, or there was a high chance it was going to be a breakout, and started to make decisions accordingly. We didn't know that Bitcoin was going to top out in roughly July, then a brief top here in August, and of course the October top before the $20 billion liquidations. But we started to make plans for it, as we talked about with our members, and how we started to position our portfolios as well, leading into this particular event. And so from there, Bitcoin obviously has been down, and we're going to measure things from the April tariff crash low, just to put things into perspective. So from that April tariff crash low, Bitcoin is up 24% to today. The S&P 500 is up roughly 41% to today's price. And in the case of silver, it was about 116% from that low. So that shows where the money was going. And of course, as investors, we're trying to figure that out every step of the way, day by day, week by week, month by month, year by year. Where is our money best positioned? And looking at the chart like that, you might think there's no chance because it's still so low. It hasn't broken the highs, and there really wasn't the interest in silver at that time. The interest was more so in gold. The interest was in Bitcoin. Of course, it was trading around highs. Here is your June period. It had just broken into a new high in May, pulled back, and then started to run again in July. And at that time, we don't know if Bitcoin is finished here in July, or is it finished here in June, or has it got another leg to go to 200K? Of course, none of us know that at the point. We're just trying to assess the charts at the time. And so into that period, we have been watching the breakout, and the strength continued to increase in silver, and of course begin to lag in Bitcoin. And one of these charts does it best. When you're comparing the two, you're looking at Bitcoin versus silver, or Bitcoin versus another asset, or even two different assets that you are interested in. Which one is going to be better for the long haul? And this one here is just a really simple, clean look at Bitcoin against silver. How many ounces of silver can one Bitcoin buy? That's what I've got here. How many silver ounces to buy one Bitcoin, or vice versa. One Bitcoin was buying about 3,200 ounces, so 3,200 ounces, roughly maybe 320 of these blocks. It's a lot for one BTC. Now it has more than halved and continues to fall, so it's at 1,500 an ounce. Does that help us at all now? Not particularly if you're heavy in Bitcoin and light in silver, or have no silver at all. But you can see at least I think, you can see the benefit in understanding these charts and beginning to identify where some strength and weakness may lie. Of course, as I said, I don't know for sure. I just want to remain as humble as possible when it comes to these sorts of videos. Yes, you're only as good as your last call. I think that call was pretty all right. You don't always get them all right, and I definitely don't get them all right either. But this has been a good one. So how can we work forward from this point? Well, the first thing I'm looking at is silver again, or silver on a monthly chart, and I'm using the monthly swing. And this is on your Gann Swing Pro, part of the indicator suite. You can find a link to that in the video description down here, indicator suite. The point of this is to identify whether we've seen periods like this in history and what has happened next. Because through these times, in the case here, we're at 8 months up in a row. That means we've not seen a lower low in this entire period. And that stems all the way back from April. So there's been a few instances where we've seen these extensions in the past. Here is 8 months. The last times we saw these extensions to the upside was basically at the end of the last bull market. The end of the last bull market, that was into 2011. So just hold the horses. I know I said end of the bull market. It doesn't mean it has to be the end, because you can see back to the prior one. This one here was 9 months, and that was in May 2006. But each of these occasions or have something in common, where you can see the price slowing down. Prior to that, you had the beginning of you were right in the middle of the accumulation. You could argue that the bull market started from 91, because that's from the dead low of the market. You can see it here on logarithmic a little easier. Or I like to use 2001, because that's when gold bottomed. So I'm looking at the overall precious metals low, gold and silver, and also the commodity cycle low as well, somewhere around that early 2000s. And in that period, through that accumulation, there were two instances where you had a long extension of monthly bars, monthly candles that ran up and did not break their previous low. One of those instances was 1994, another one here in 1998. And from those points, you can see in each of those occasions, the price basically stopped dead. Yeah, you're going to get some people that are excited by a few cents or maybe a few bucks. So here's the top to the next top. That was 30 cents higher, but 5% increase. We're not after that in these markets. I'm talking about multi-year bull markets here for for these assets that we're looking to hold, right? And that basically stopped the market dead. You had a correction, tried again, and corrected. So that's a period of 1 to 3.5 years. It did it again, and then it was down for another 1, 2, 3.5, 4 years before you got the low, and then the market started to rip again. Then prior to that, you had an 8-month span after a major bull market top, massive correction. That correction was 90%. 90%, crazy for silver. 8 months up, and then it faded out from that. So we saw it happen in a bear market, we saw it happen in accumulation, and we've seen it happen in bull markets. You've got a 7-month here in a row. So that was straight up, very small, just 22%. It still corrected after that point and stayed underneath the level for another several months before it was able to go on this last final leg into that 1980s blow off top. And that last one there was 18 months. So one time in history, you got 18 months. Now, I'm doing this analysis on the CFD chart, so it's not as reliable as the futures market, but for some reason, TradingView does not want to show the futures market data. We know it goes back to the 70s, but for some reason it was there and now it's not there. I don't know when they're going to bring it back, or if it's something that, user error, maybe it's my fault. I've seen it on a few charts that people can't get it, so that's why we're using the CFD chart for that history, further history. But going over to the futures chart, which is more reliable, but only goes back to 1998, you've got two major instances here of a 9-month to the upside, and then it went sideways, and then an 8-month with 1 month down within that same month that it put in the 8 months to the upside. And then you had this final leg up. So 1, 2, 3 months up, pretty significant move, extreme blow off top move, nearly 90% in those 3 months. And then the market basically major correction, lower high, weak signal, collapse. So I think it's now going to come down to what area of the market you think we're in. I'm going to have to pick a side because obviously I'm invested. So do I think it's here at 0.1, or do I think it's at, let's call it 0.2? I think we have a better chance at the moment that it could be 0.1, which still means there's going to be some time to consolidate, because we've only seen it one time in history where it has gone more than this period of 8 to 9 months. And that was at that blow-off top in 1979 to 1980. January 1980 was the top. So either way, if this is going to be the blow-off top, you've got another 8 to 10 months if it's exactly the same like last time, which no one expects things to be exactly the same. Otherwise, I'm looking a little bit more into the favorable figures here, where you've seen 9 months, 8 months, 7 months, 7 months, 7 months to the upside. In terms of a percentage, roughly around the same where it should be. There's 9 months at 128, 8 months at 83, 7, 7, 7, all double digits, 73, 48, 22s. And then the 18 months is absolutely insane, 832%. So for the extension, we've seen once where it goes to 9 months. If that happens, well, that could be into January, and then you get the pullback. If it happens similar to what's happened throughout history, going back nearly 60 years for silver, then where does this thing pull back? Let's have a look. So we've seen significant corrections in the past, 30 to 40%, as I've covered in prior videos, through here and here and here, where we look at the percentages of the corrections after that period. So in terms of a time-based pressure point, we're getting to the extreme end. It's done it once to 9 months, and we've seen an 8 month before. Obviously, the 7 months are there. So we're pretty much right at that extreme end. So yes, it's been said before, there could be a correction, but the really important part is the daily hasn't turned down. We've got a new all-time high. The weekly hasn't turned down. There's still further to go. If you've got a 9 month and we're only in the 8th month, this could keep going into January, and that could keep putting on more and more percentage. We just have not seen any signs of a slowdown yet. But if we're looking at this, because that's been one of the big questions that has come up, like when to buy silver, and I've seen it with our members as well, asking the question, when do you think there's going to be a correction? This is how I'm looking for a correction. We're looking at the extension of the time frames, and then we'll look at the corrections and where that point comes to right now, with the when we do get that top, where that correction is. Okay, so we're looking at roughly 30-40%. And in the past, it has corrected back to the 2 months prior to the top. So you can see that there's 2 months prior. It's gone back and tested that price range there. That was about 20 odd percent. This one here was through the GFC, so it was a much bigger percentage as well. The first move down, 25%, and then to that final low, 60%. So huge, huge move. I don't know if we're into that stage of the stock market cycle yet, where we got this major collapse event just around the corner. So I'm not counting on this sort of 60% correction, but let's stick with the 20 to 25% correction so far and see where that puts the price of silver. And then there was still several months of consolidation. You've got from the low to the next low, 14 months, 15 months to the move as it starts to break out, and then 17 months as it breaks from that top. Okay, so that would be 17 months from the low to the high, but 18 months from that top to this top here. Then you've got 21 months all the way to that peak and so on. So the main thing here is that it's quite a long consolidation once we get to this turning point. So I don't think we need to be like FOMOing into the market on any sort of 1 or 2 day pullbacks. And speaking of pullbacks, when we look at our 3-bar rule, we'll have to go back and test whether that has helped. You can see in the case of silver, we haven't seen any 3 days down from the all-time high. We got one here, 1, 2, 3, but that wasn't from the all-time high. So it just pulled back and then started to rip again. So we'll continue to follow some of those other signals that we've used very successfully on Bitcoin that has called all of those tops. But in terms of the correction, wherever that comes in now for silver, if we do find a top soon, let's say today's the top, all right, at 61.46. 20% comes out at around $48, $49 an ounce. 25% is about 46. There's 46 bucks. Okay, so we're looking in those high 40s if this is the top. That would line us up pretty well with the prior top. So you can see, throw a line through there at 48. And just again, so we can see it with the red lines, there it is, 20 to 21% from the high to the low. And that would be back to where those previous highs are. So it looked like it would be coming back to test those previous tops. And last time, that took off and it still fell short of testing those previous highs. But when it did break out here, that was just out of the consolidation. It hadn't broken the previous old all-time high. And when it did touch the all-time high, it reversed pretty quickly. And this is the first time we've actually broken past both of these all-time highs. As always, no one has the crystal ball. We just got to position ourselves as best as we can and look for those entry opportunities when they are there, which means you can't really just turn a blind eye and come back when everyone else is talking about it. No one was talking about silver through the late part of 2024. People weren't talking about silver in 2023. You know, all the talk was about recession at that time. So through those consolidations, it's really a boring time. And at the moment, I don't think it's a boring time for silver. So I'm waiting for, firstly, that time-based pressure that we're looking at. Are we going to get this turn here at 8 or 9 months? Secondly, if it does happen, we're going to look at all the short-term signals, looking for the trends to turn down with the Swing Pro on the daily, weekly, monthly, of course, and some other of the signals that we've used, as I've talked about with Bitcoin. You know, 3-bar down from significant highs. If that shows up, it could be, it's not a guarantee, but it could be a good sign that things are looking like they want to slow down for silver and consolidate. If that happens, I suspect the S&P 500 should start to pick up a little more steam again. Also, the NASDAQ may pick up some steam, and you'll start to see more of the interest go across to stock markets and AI stocks. At the moment, it's been a little bit lackluster, and there really isn't much of a follow through here for the stock market. So if they do correct, that could be a little bit more fuel to the fire for silver at this point. Now, many have said that the move higher for silver is based something on interest rates, whether everyone's expecting the interest rates to come down tomorrow. There's less than 24 hours to go for the meeting. You can see 87% of the market believe we're going to get the cut. And whatever they're doing with the narrative now, they're saying the cut is a good thing for metals. I don't know. Sometimes they say the cut is not a good thing for metals because if you've got to increase the interest rate, Then there's inflation, and of course, you want to run to hard assets for inflation. That's the stupidity of these narratives that the media and other analysts that just follow those media narratives come up with. The stupidity of it is they can turn it bearish or bullish at the flip of a dime, right? So I'm not even going to, get too far into that. Let's see what the Fed does tomorrow and how the market reacts from that. It's probably going to be a short-term thing, days, maybe a week or so, and then the trend is going to do what the trend has always done. So the support level now for Bitcoin versus silver, coming over to these last questions here, silver or Bitcoin. Well, we're getting very close to a support level now, 1,340, or we can go all the way down to these, roughly 1,200 to 1,300 ounces of silver for one Bitcoin. That has been a historic level. You can see it back through the start of the bull market. That was the March peak. And then it took a few more months for Bitcoin to break through that level. Of course, Bitcoin get the strength and silver just do what silver was doing. So if we get back to roughly 12, round numbers there, 12 to 1,300 ounces, it could be an area that we would expect a base to form here for silver versus Bitcoin, which means either, well, many things. Silver is either going down and Bitcoin is going sideways. Silver is going down and Bitcoin is going up. That's if we find support here and this starts to rally, because that means Bitcoin is getting stronger than silver. Or the other scenario is silver is going down, Bitcoin's going down, but Bitcoin isn't going down as fast as silver, which means you're still going to be able to buy more silver ounces for every Bitcoin. So we're watching that rally next. Now, if you've made it this far in the video, much appreciated. I had a little bit of rambling there, but I think it's important we cover the charts and rotating assets through this final stage of the market. And I did manage to slip it in here. Here is the 18-year real estate cycle. So we're getting close to the end here. It doesn't always mean that metals are going to be the safe haven at the end of a real estate cycle. It wasn't the case in 1990 for that 1990-1991 recession. You had 1989, 1987. Silver was not up then. Here is 1987, 1988, 1989, 1990. That's silver price way down here. Okay, so that's not the case. But are we going to see some basing here and then a bit of a rally? Strength would be a rally back above 50%. So watch out for 2,100 ounces. Can one Bitcoin buy more than 2,100 ounces of silver? Yes. Maybe we're seeing our first signs of strength. Then it's got to get back above the other double bottom that we were watching on the breakdown. That was back here at 2,300 ounces. And then there was a double bottom breakdown at 1,700 ounces. If it can get above those levels, great. That's going to be a little bit more strength for the case that Bitcoin is the better safe haven than silver. It's not the end of the show, but at least that's a strong start. Otherwise, rallies up, rejections at 1,800, rejections at 2,000 or under 2,100. That's not going to be a good sign there for the case of Bitcoin being a safe haven towards the end of the cycle. So should you buy silver or gold? Should you buy silver or Bitcoin? That is going to be the telling sign on this rally. So they're the key levels overhead. Should this chart get rejected, that's going to tell you which one's stronger or weaker in the short term. And we're looking out roughly 1 to 3 months for this particular move. The 1 to 3 months comes from Bitcoin and where I think this relief rally is going to get us. The same time frame, still looking roughly late January, early February as a significant time frame for this market to at least hold ground here and basically get to any sort of invalidation levels if it is going to push higher. Otherwise, we're still in for that relief rally that we've been talking about, discussing here on the channel, and possibly another leg to the downside. And that's why this particular chart comes in very, very handy over the coming months. So that's my position on silver at this current time, especially with that new all-time high price. We've looked at the timeframes, we've looked at the percentages, the possible correction coming up, how I'm looking to play this, whether it's to the upside or the downside, of course, whether we're loading up into the position a little harder. I think there is still further upside to go for silver in this multi-year bull market, but it's not going to be without major volatility like we've seen every single time in history after it's done such a significant run in a single direction without any sort of signs of slowing down in that time. Like, subscribe, check out the free reports that have come out to you Tuesday, Wednesday, and Thursday. You still got time to grab those. There's a link in the top of the video description. And I'll see you guys back here at the next video looking at, as always, precious metals, stock markets, Bitcoin, and cryptos. See you guys back in the next one. Cheers.